Right now, CPA and market analyst Dan Geltrude. Dan, it's always a pleasure having you on the show. What you're saying is get out of your food coma, get on your computer, and start doing some things. What do those things include?
Well, as you know, Todd, I know you're very on top of this topic.
Love it.
Yeah. So it's not too late for 2019, but there's not a lot of time left. So what we need to think about is how can we potentially lower income before the end of the year? One of the ways that we can do that is by putting money into your retirement plans. Maximize what you put away. So you want to definitely contribute into your IRA. If you have a 401k available, make sure that you do that as well.
Now let's pop up the full screen showing the maximum contributions for your IRA and for your 401k. IRA $6,000, then you get that additional $1,000 if you're 50 and older, one of the benefits of being older, and then $19,000 for your 401k, plus an additional $6,000 if you are 50 and older as well. But it's not just IRAs and 401ks. There's other things you can do right now to lower that tax burden.
It's good to be charitable, right, Todd?
Right.
And you want to make sure that you maximize your charitable contributions. You know, with the new tax law, a lot of the itemized deductions went away, right, in simplifying how we file our tax returns. Charitable donations, however, are still deductible, so you want to make sure if you are itemizing that you take the maximum amount that you can.
This one is a little controversial, bringing in a little policy. Move to a lower tax state might be something difficult to do in the next 7 days, but something that you might want to think about in 2020.
No doubt about it. Look, the cap on the SALT deduction really was a killer from a tax standpoint for a lot of people that are in high tax states like where we are in New York or New Jersey or Connecticut. So you may want to give some thought to, in 2020, hightailing it out for, shall we say, greener pastures, right. Florida, Texas, where there is no income tax.
Or you could wait for that lawsuit to make its way through the courts. Obviously, those states fighting the SALT problem, and we're going to see what happens. There's another big thing that you say, especially if you have a few more means than maybe other people, start a gifting program to ensure that your money goes to your heirs somewhat tax-free.
That's right. So right now, Todd, the estate tax is going to expire, the limitation, which is right. $11.4 million per person. That's going to expire in 2025. I would anticipate that is going to go down, that exemption.
Which means more people are going to get caught up when they try to pass things on to their family.
Absolutely. So you want to take a look at maximizing your gift, as you said, if you have the means to get those dollars out of your estate as quickly as you can.
And quickly, in the time we have remaining, check your withholding.
No doubt about it. Look, people should have done that last year. If they haven't done it, take a look at it. You don't want to have any surprises when you're filing your tax return and finding out that you owe money as opposed to getting a refund.
Very important. This is a very serious discussion. I wonder if you can deduct your shoes as a casualty loss. They look like you.
I don't necessarily think these are a loss, but
there's something. You know. Dan Geltrude, Merry Christmas.
Merry Christmas,
Happy New Year.
Todd.
We appreciate it. Carly, back to you.
I think Dan Geltrude's got the best shoes in the game, for sure.
What game is that?
The time is now 30.